Hello everyone and welcome back to another video. There's a lot that I want to discuss in today's video that's going on with the stock market and on social media. Amazon has announced that it's working on robots that can jump off of vehicles and deliver packages to your door. Elon Musk and Donald Trump are in a huge fight on social media right now, and it's escalating quickly as I am recording this. Mercado Libre's CEO stepped down, and the business also announced that its digital bank expansion is starting in Argentina. Brookfield announced a $10 billion data center investment in Sweden. I also found a very interesting stock that's highly profitable, it's growing quickly, and it's only trading for 13 times free cash flows. And lastly, I want to share some Warren Buffett clips that I found. This is going to be a crazy action-packed video. And we got to start off by talking about the Elon Musk and Trump feud that is happening right now. So let's get into it. And it started off with Elon Musk discussing how the US is continuing to spend a lot of money and expand the deficit. For those of you who may have been living under a rock, Elon Musk was the person pushing DOGE, the Department of Government Efficiency. Elon Musk was helping Trump win the election and supporting Trump because he believed that Trump was going to be the person who would actually tackle the government spending in the United States and try and lower the deficit and start using some fiscal responsibility. Well, now Elon is directly attacking the Trump administration because of their big, beautiful bill and them wanting to continue expanding the deficit and expanding the overall government debt. So Elon has started to be very vocal about this online, and basically saying that the Trump administration is not sticking to their word, and they just want to continue printing money and expanding the deficit. Then in this next post, this says, there's a lot of stories and accusations flying around that Elon went against Trump's big, beautiful bill because he was mad he didn't get favorable treatment with Tesla or Starlink or SpaceX. Or he could have, not liked the bill because it nullifies his work without some ridiculous invented retaliatory reason. Then Elon responded saying, it more than defeats all the cost savings achieved by the Doge team at great personal cost and risk. Then in another post today, he said, without me, Trump would have lost the election. Dems would control the House, and the Republicans would be 51-49 in the Senate. Such ingratitude. Then he also tweeted today, the big ugly bill will increase the deficit to 2.5 trillion. So you can clearly see that Elon kind of feels betrayed by the Trump administration, because he started the Department of Government Efficiency, and his whole role was to try and get government spending in order and in line. But now he is saying this big, beautiful bill is going to defeat all of the work that he did. And think about it. Elon left Tesla, he left SpaceX, he left all of his companies to go and try and help the government get spending in order. And he did that at great personal risk. That's a security risk for him. And people were directly attacking Elon and his companies because he was doing this and getting involved with Trump and politics. And now I think Elon feels betrayed because he took all of these risks with his company financially and with his own security to try and help the government. And then when he actually gets in there and when Trump gets in there, and then they just throw all of this work out of the window, then Elon is probably sitting there like, well, then why did I even do this? Why did I help you guys? Why did I support you? Why did I leave my companies? Why did I put myself at risk? And I think that this is why Elon is absolutely blowing up right now. There's a lot of different theories going on where, Trump is taking away the EV credits and the EV mandate, and that's harming Elon's companies. So maybe that's why Elon's freaking out. But personally, I think that Elon just feels betrayed. And he's definitely going on X to share his frustrations. For example, Elon also tweeted, where is this guy today? And the screenshot that he tweeted was historical tweets from Donald Trump, where Trump is basically just saying that the people in charge of the government should not be expanding the debt ceiling. And he's even calling out the Republicans all the way back in 2013 for increasing the United States debt levels. And now that Trump is in office, he's doing the exact same thing. So Elon is basically calling Trump a hypocrite. Then Trump started to respond, and he posted this video today. So I'm going to play it quick.
He knew it, but if they picked him, I would have won Pennsylvania. I won it by a lot. But I'm very disappointed because Elon knew the inner workings of this bill better than almost anybody sitting here, better than you people. He knew everything about it. He had no problem with it. All of a sudden he had a problem, and he only developed the problem when he found out that we're going to have to cut the EV mandate because that's billions and billions of dollars, and it really is unfair. We want to have cars of all types. Electric, we want to have electric, but we want to have a gasoline, combustion, We want to have different. We want to have hybrids. We want to have all. We want to be able to sell everything. And when that was cut, and Congress wanted to cut it, it became a little bit different. And I can understand that. But he knew every aspect of this bill. He knew it better than almost anybody. And he never had a problem until right after he left. And if you saw the statements he made about me, which I'm sure you can get very easily, it's very fresh on tape, he said the most beautiful things about me. And he hasn't said bad about me personally, but I'm sure that'll be next. But I'm very disappointed in Elon. I've helped Elon a lot.
So you can see that Trump is trying to keep it civil until this point right here, but he was saying that the personal attacks are probably going to be coming next. And what Trump is trying to say here is that Elon got upset because Trump is removing the support for Elon's companies. And Elon actually knew everything that was in the big, beautiful bill. And it was only after these new announcements, or the announcements of Trump not funding his companies really anymore with the EV mandates, then Elon started to freak out. So that's the narrative that Trump is trying to push. Then Elon said, "False. This bill was never shown to me even once and was passed in the dead of night so fast that almost no one in Congress could even read it." And then after this interview, Donald Trump put out on Truth Social that Elon Musk just went crazy. But this right here is the most crazy screenshot of the entire video, and this just happened like 15 minutes ago. So Elon said, time to drop the really big bomb. Donald Trump is in the Epstein files. That is the real reason they have not been made public. Have a nice day, Donald Trump. Mark this post for the future. The truth will come out. Like, this went from 0 to 100 so freaking quick. And this is the personal attacks that Donald Trump is talking about. So these two are officially going at each other now, basically on public social media. And at the same time, Tesla stock is now dropping, and it's down 14% on the day. And a lot of people online are saying, well, Elon supporting Trump caused the left to not respect Elon anymore, and now Elon is attacking the right, so now the right isn't going to respect Elon anymore. And people are thinking that this is going to impact Tesla's business even more. I don't know how this is all going to play out, but it seems like it's definitely having an impact on the markets, especially with Elon's businesses. So let me know what you think down in the comment section below. Are you guys on Elon's side or are you on Trump's side? And what do you think is Elon's overall motivation here? I personally think that Elon is being on the more genuine side and really wanted to get the government debt in check. And now that the government debt is projected to continue exploding, he's just kind of pissed off. But I do see the other side, and let me know what you think down in the comment section below. So now let's move on to the Amazon news that came out. And there was an article that was released recently that says Amazon is reportedly training humanoid robots to deliver packages. The robots would be driven around in Rivian vans to jump out and drop off packages at homes. Then in this article it says, future Amazon orders may be delivered to your door by a humanoid robot workforce. The information reports that Amazon is developing AI software that will enable robots to operate as package delivery workers. Amazon has also finished constructing an indoor humanoid park at one of the retail giant's San Francisco offices that's roughly the size of a coffee shop. Hitch a ride in the back of an Amazon electric Rivian vans and sprint out to deliver packages. So Amazon is developing humanoid robots that are going to ride around on the back of Rivian vans and then jump off and deliver packages. That's what Amazon wants to happen. So delivery drivers and delivery people may go out of work, and this is probably going to expand Amazon's margins if this actually happens. Now, why I also find this interesting is because Elon Musk has claimed that the Optimus robots that Tesla is building could make Tesla a $25 trillion company, because Elon Musk thinks that the humanoid robot industry is going to be worth trillions of dollars. Now, my criticism of Elon Musk is I think that he is way too optimistic in his future projections, and I think that investors get caught up in Elon's optimism. And what I've noticed is Tesla investors especially, not all of them, I don't want to bucket everyone together, but some Tesla investors believe this stuff, and they think that every market that Tesla enters, like the humanoid robots, they're just going to completely dominate, there's going to be no competition, and margins are going to be 100%. Like, that is the future timeline that would have to play out for this to even have a shot at being true. But what's happening in reality is Tesla may be the first in a market. Like, they were the first big electric vehicle company that was really doing it at scale. But then what happened is BYD came in. And now BYD is absolutely dominating Tesla in markets around the world. They're taking massive market share, and that company's electric vehicle sales are exploding at the same time as Tesla's is going down. Just go and look at the facts. BYD is beating Tesla now. So that is a market where Tesla saw competition, and I would argue is actually losing to the competition now. And I think that with autonomous driving, in my last video, I said this is probably going to be the case as well. Tesla is going to have competition. And I think that we're now seeing that Amazon is going to be a real competitor in the Optimus robot market, or the humanoid robot market. So I think that Tesla investors just have to consider that there's going to be competition in these industries. And it's not just going to be Amazon and Tesla that have humanoid robots. I've also seen videos of Chinese companies that are building humanoid robots. There's also Boston Dynamics. So I don't think that Tesla is going to be the only company that builds these innovative technologies. And I think that there's going to be more companies, more competition, decreased margins, and these things could become more widespread than people think over the long term. So I am very hesitant to have faith in Elon Musk that Tesla is going to be a $25 trillion company. I think that's honestly just kind of insane. Now, moving back over to Amazon, AWS's CEO said that the AI cloud sales of AWS hit multiple billions of dollars annually as enterprise demand is surging. Then they have a quote down here that says, "What we're seeing is enterprises across every industry racing to implement AI solutions. The demand is stretching our infrastructure capacity." So it sounds like Amazon is still seeing more demand than they have infrastructure for, and the demand for cloud computing is still more than they can supply. This is why Amazon is investing over $100 billion in CapEx over the next year. And I actually think that this is a good thing for Amazon's business, because the CEO of AWS and even the CEO of Amazon has said they wouldn't spend all of this money on CapEx if they weren't absolutely confident that it would produce high returns on capital over the long term. So I personally think that the increased CapEx spending that Amazon is doing right now should be viewed as future profit potential for the business, because again, they're saying that they're going to get high returns on invested capital on all of this spend, and I do believe them. Now, another thing about Amazon, if we head back over to Stock Unlock right here, is I think that Amazon's profit margins are going to continue expanding over time. And what this ultimately means is that Amazon's profits can continue to rise at faster rates than the overall revenue that the company generates. For example, if we go and take a look at Amazon's gross margin, we can see that all the way back here in 2011, their gross margin was 22.4%. And in the trailing 12 months now, it's been 49%. So Amazon has more than doubled their gross margin over the past 14 years. If we take a look at Amazon's operating margin, it's been a little bit more inconsistent, but it is currently sitting at an all-time high of 11%. And as AWS and Amazon's highly profitable business segments, like their advertising segment, continue to grow at a faster rate than the overall business, they're going to make up a larger portion of the business as well. And that is naturally going to expand Amazon's profit margins over time. That is my personal investment thesis in Amazon's business right now. And I also think that this is a business that has so many levers of growth. They have so many different business segments that are also highly profitable and growing quickly, that over the long term, I think this business is just going to continue to become a massive giant. And out of the Magnificent Seven, I actually think that Amazon has the strongest moat and the most long-term durability, and is the least disruptible by artificial intelligence. And for those reasons, Amazon is the Magnificent Seven stock that I still hold in my portfolio. And it is also the only Magnificent Seven stock that I have actively been buying over the past couple of months. So yes, full disclosure, I do own Amazon shares. And at this price range, I don't think that Amazon stock is looking very expensive today. All right, now let's move on to the Brookfield and Barclays news. And you guys know I love Brookfield. It's the largest position in my portfolio. And it's been a while. It's been about 3 videos since I've talked about Brookfield. So I feel like we're due for some Daniel Pronk talking about Brookfield. So let's go. All right, this article says, Barclays partners with Brookfield Asset Management to enhance its payment acceptance business. And this was actually released on April 22nd. But I've been trying to take a break of the Brookfield news a little bit. So I think it's about time we talk about it again, though. Now, in this article, it says, Barclays and Brookfield will work to create a standalone entity over time, while ensuring that Barclays' payment acceptance business is strategically positioned for long-term growth. Barclays' payment acceptance business provides critical infrastructure to the UK economy, processing billions of pounds of payments annually for small businesses and domestic and international corporate clients. Barclays plans to invest approximately 400 million euros in the payment acceptance business, with the majority of this occurring during the first 3 years of the partnership. Meanwhile, Brookfield plans to provide expertise to support this transformation and will be entitled to a financial incentive linked to the performance of the business. Now, for those of you who may not know, Barclays has $1.9 trillion in total assets, and is the second largest bank in the United Kingdom. For perspective, it has more assets than Royal Bank of Canada, which is Canada's largest bank. So this is a pretty massive deal for Brookfield. Now, going back to the article, it says, Brookfield may acquire an approximately 70% ownership interest in the acceptance business. Upon the sale by Barclays, Brookfield's initial financial incentive granted at the start of the partnership will convert into an additional 10% shareholding in the business, resulting in a total Brookfield shareholding of approximately 80%. Barclays strongly believes in the long-term prospects of the payment acceptance business, and following its intended sale, expects to retain an ownership interest of approximately 20%. So over the long term, Brookfield can acquire up to 70% of the company, and it can also gain another 10% ownership incentive if it meets its financial incentives. This deal is interesting because it marks Brookfield's first major investment in digital payments infrastructure in the United Kingdom, aligning with its broader strategy to expand in technology-driven financial services, a sector that's expected to grow at a 10% compounded annual growth rate through 2030. By securing a majority stake in this business with stable recurring transaction-based revenues, Brookfield gains exposure to a resilient and stable income source that's most likely to grow over the long term. Additionally, yesterday, Brookfield announced that it's investing $10 billion into a Swedish data center. In this article, it says, Brookfield Asset Management plans to invest up to 95 billion kroner, which is about $10 billion, developing artificial intelligence infrastructure in Sweden that will take 10 to 15 years to construct. The so-called AI factory will be the first of its kind in the Nordic nation, Brookfield said. And this is just Brookfield continuing to execute on their overall business strategy and supply the infrastructure and financing that different economies around the world need to develop AI and build out data centers. Brookfield is actually one of the largest data center builders across Europe now, and this deal comes after Brookfield committed 20 billion euros to France to help build out their AI data infrastructure as well. And this is partly why Brookfield is the largest position in my own portfolio. This company has a fantastic track record of building and creating shareholder value. There is high insider ownership, so the insiders are aligned with me as a public shareholder as well. And Brookfield's whole investment thesis is that this is one of the companies that is building the backbone of the global economy and futurizing the global economy as well. I think that they're just continuing to do a great job. That's why they remain number one in my portfolio, and I'm actively buying more Brookfield shares in the market as well. I actually just nibbled on some more shares today because I do believe that the stock is still looking undervalued over the long term, and that's just my opinion. And again, that's why it's the largest position in my portfolio. Now let's move on to the MELI news. And this is some pretty big news because MELI's CEO and founder stepped down from the CEO position, and they wrote a letter to the public shareholders to explain why this happened. And I underlined the key points here. So this says, after 26 years leading the company as CEO, I have decided to transition to a new role as executive chairman starting January 1st, 2026, when Ariel, I'm not even going to try to pronounce that, will assume the role of CEO. In my role as executive chairman, I will remain closely involved at MELI. My focus will be on strategy, product development, culture, capital allocation decisions, specific projects, and how we will continue to apply artificial intelligence to transform our business and our company. In regards to the new CEO, he joined MELI in 2017 and started in strategy and new business, then led the development of our logistics network through Latin America. So the CEO is stepping down, but they're still going to be involved with the business, and it sounds like they're going to be closely involved, as they will be the executive chairman on the board. So I think that he's just not going to be so much involved in the day-to-day of the business, but he still is going to be involved in the large decisions and driving the company forward. Then he wrote, "This is a generational change. And I know that Ari, along with the talented team that has supported me, has everything it needs to ensure MELI continues to grow strongly in the coming decades. I founded MELI in 1999. Always prioritize what's best for the company beyond my personal feelings." Then down here, he says that he is happy that he has built and developed the largest technology team in Latin America, the largest e-commerce logistics network, became the company with the highest market valuation in the region, and above all, realized his dream, democratizing commerce and finance in Latin America, and helping hundreds of millions of people live better lives. Then he closes off the letter by saying, "I believe one of the most important challenges MELI faces is ensuring a successful transition once its founding CEO leaves that role. I have seen technology companies face difficulties in this process. Today, MELI is experiencing one of its best moments. The opportunities ahead are practically unlimited. Therefore, believe me when I tell you that the best is yet to come. I recently did a 2.5 hour deep dive video on Mercado Libre for my Patreon community. And in this video, I explained that MELI's business is actually accelerating. And MELI, the way that I view MELI is it's not just an e-commerce company down in Latin America. This is a very diversified business with many different business segments that are all growing and accelerating. They're e-commerce, they're advertising, they're digital advertising, they're a media business, they're a digital payments business, they're a digital bank, they're an overall fintech company, they're expanding across Latin America. So it's not just one business, it's multiple different businesses under the Mercado Libre brand, and all of their businesses are accelerating right now. For example, MELI just applied to become a 100% digital bank in Argentina. Now, if we go over to MELI's KPIs here, we can see that their Argentina revenue is growing extremely quickly. In 2020, in the trailing 12 months, they did about $790 million in revenue in Argentina. And in the trailing 12 months now, they've done 4.6 billion. So their Argentina revenue has roughly 6x'd since 2020, and it's hitting a new all-time high right now and clearly re-accelerating. MELI's overall fintech business produced $1.24 billion in revenue in 2020, and in the trailing 12 months now, it's produced 9.4 billion. And you can see here that the revenue is accelerating for this segment of the business as well. Over the past 5 years, MELI's fintech revenue has compounded at 57% annually, and it's continuing to explode. What's also interesting is one of their main competitors in the digital banking industry in Latin America is Nubank or New Holdings. Nubank is solely a digital bank in Latin America. They're not nearly as diversified. And we can see that Nubank's revenue growth rates are actually decelerating right now. And this is at the exact same time that MELI's fintech business is accelerating. So in my opinion, I think that MELI is taking market share from Nu, and MELI is the better fintech business. And again, this is one of the reasons why I own Mercado Libre. Another reason is that this fintech business that Mercado Libre owns is just one segment of the business. Then they also have e-commerce, they have digital advertising, they have media, they have an acquiring business, they're a digital payments platform. So I think that Mercado Libre's business is just much more stable, it's much more diversified, and they have a lot more growth drivers in Latin America. And that's the reason why Mercado Libre is in my portfolio and I don't own Nubank. In terms of Mercado Libre's price today, its market cap is around 130 billion, and I estimate that this company could do about $5 billion in profits annually, which means that it is trading for about 26 times profit potential today, or about 26 times free cash flow. This company is growing its overall revenues by 37% right now, and I do actually think that a 26 multiple is pretty fair for this business. So overall, I do not think that Mercado Libre is an absolute steal in the market anymore, like it was when it was trading for about $1,600 to $1,800, and I was covering it on my channel, letting everyone know that I was buying more shares. But right now, I think that it is trading more near fair value. I think that it is not expensive. I think that it's fair value, but I don't think that it is necessarily cheap today. So that's the recent news that has come out with Mercado Libre and some more context as to why I own this business over Nubank. All right, now let's move on to a stock that I found that I think looks very interesting, and I want to explain why I'm not buying it though. So this one's ticker is Halo, Halozyme Therapeutics Inc. Now this stock, we can immediately see that it's trading for a 13 price to free cash flow. If we also take a look at this company's revenues over the past decade, we can see that they have been compounding by roughly 30% annually, and the company's revenue hit an all-time high of 1 billion in the trailing 12 months. Its gross margin is 83.5%, and its free cash flow margin is sitting around 46% right now. So this is a highly profitable company that's seeing its revenues consistently grow, and it's trading for a 13 price to free cash flow. So then I went and I took a look at the company's future outlook to see if they give us any guidance. And we can see that for 2025, they are expecting $1.2 to $1.28 billion in revenue, which is year-over-year growth of 18 to 26%. Non-GAAP diluted earnings per share is also projected to be $5.50 this year, which is growth of roughly 30% year over year. So it looks like they're also expecting growth rates to continue for this year and 20+% growth rates this year, which is again a very strong year. So then the question is, if this company has such great metrics, it's highly profitable, it looks like it's going to continue growing by 20% plus this year, then why am I not buying its shares right now and buying as much as I possibly can? And the reason is because, well, it's a biotech company, and take a look at these next screenshots. So this company says that it's seeing an unprecedented number of current and new growth catalysts. 3 blockbusters driving currently strong growth: Darzalex SC, Phesgo, Vigart, Hytrulo, then 11 upcoming or new growth catalysts that are expanding the opportunity. Darzalex SC, new quadruplet regime frontline indication approved in Europe. Phesgo NDRL listing in China, accelerating growth. And these are just a lot of names that I just have no idea what's going on. And then in this next screenshot, they say that they have significant runway for growth. Chronicle inflammatory demyelinating polyneuropathy, oscular myasthenia gravis, myositis, Strorgen. So when I read stuff like this, it sounds like an alien language to me. And as someone who is not in the medical field, I have no freaking idea what's going on here. So even though this company's metrics all look fantastic, this thing is just so far out of my circle of competence that I can't even see it. And this is something that I wanted to highlight because I've seen that a lot of people in my comments say that I'm an investor who just invests based on financials. That's absolutely not the case. And if you're a member of my Patreon, you know that this is definitely not the case. I have to be confident in the business, its moat, and what the company actually does. And whenever I take a look at bio companies like this, someone else may fully understand what's going on here. But when I read these companies' financial reports, again, it's like an alien language, which ultimately results in me not wanting to buy the shares because I don't understand the company at all. And this leads me to the Warren Buffett video that I want to play for you, which is right here. So let's take a quick watch of this video and then quickly discuss it afterwards.
Only should expect to make money in things that I understand. And when I say understand, I don't mean understand, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now. I know in general what the economics of, say, Wrigley chewing gum will look like 10 years from now. The internet isn't going to change the way people chew gum. It isn't going to change which gum they chew. If you own the chewing gum market in a big way, and you've got Double Mint and Spearmint and Juicy Fruit, those brands will be there 10 years from now. So I can't pinpoint exactly what the numbers are going to look like on Wrigley, but I'm not going to be way off if I try to look forward on something like that. That evaluating that company is within what I call my circle of competence. I understand what they do, I understand the economics of it, I understand the competitive aspects of the business. There can be all kinds of companies that have wonderful futures, but I don't know which ones they are.
What Buffett said in this clip is that he has got to understand what the future of the business is going to look like 10 or 20 years from now, or at least feel confident in what he thinks the company is going to look like and its profit potential. Now, going back to a company like Halo, even though it has amazing financials, it's highly profitable, and it doesn't look like it's trading for a high price in the market today, since I don't know what the future of this business looks like with any degree of certainty, I'm not going to buy it. So understanding the moat of the business and understanding what the business actually does and what protects the business and allows it to continue producing profits over the long term is so freaking important. It's a key pillar of my entire investment strategy. And you'll see me be extremely selective on stocks that I'm taking a look at on the channel as well. I will not invest in something if I don't think that it doesn't have a moat, or if I don't think that it has a moat. Sorry, I worded that weirdly. And this is part of the reason why I don't invest in new technologies or companies like Tesla, where they say, hey, we're going to build an Optimus robot and it's going to have a $25 trillion market cap potential for our business 20 years from now. I think that there's just simply no way of knowing that. There's no way of knowing if that product is actually going to be highly profitable and produce all of these margin expansions and everything for Tesla over the long term. So paying for that today, I think, is extremely speculative. And paying for a business or investing in a business that I don't necessarily know what its future looks like is, again, I think it's just very speculative. So I only invest in things that I feel certain about, and I believe that a business actually does have a moat. That is when I will actually buy. And I try to emulate this from Warren Buffett. So I thought that this was a really good example of a business that looks very good financially, but when you dive into the business, at least for me, it's completely outside of my circle of competence. And therefore, the lesson is I don't just invest in companies because they have strong financials or their price ratios are looking cheap. There is more to investing than just buying a business where it's growing its revenues and it's trading for a cheap multiple. You have got to understand, what does the business actually do? What is its long-term competitive advantage? And do you feel certain about what the future of the business is going to look like 10 or 20 years from now? And we are going to wrap up the video on that note. So if you enjoyed today's video, then please leave a like on it and let me know what you think of all the Elon Musk and Donald Trump drama down in the comments section below. And if you want to get access to my portfolios, my Discord community, dozens of content that only my Patreon sees, then check out my Patreon. It's only $15 per month, and people have been absolutely loving it over there, and I think that you will too. But with all that being said, that's going to wrap up the video for today, everyone. Thank you all so much for tuning in. I truly do appreciate it, and I hope to see you again in my next video.